seeing a lot of bearish order flow signatures, and I'm willing to look at how price trades to constant encroachment of Monday's range and how it trades there, how it reacts. That will give insight on what Friday's price action is going to do. Alright, so on the weekly, on the 15-minute chart, I'm drawing out new opening mini opening price. So the open of this candle, it opens and trades up. So mini opening price is right there. I'm drawing out Asian lows have just been raided. Asian highs were taken. London launch took London's high. 7:30 a.m. candle took launch high. So at this point we have a pre-market high as high of the. That really speaks heavily for a reversal. So a reversal day is likely. So that's pre-market high. Pre-market low is happening just before 9:30. So this is a 9:30 candle. I'll take pre-market low on the 1 minute time frame. But for now, price is trading in basically at equilibrium because it has taken pre-market low just close to the mini opening price. London looked like high of day, then London launch swept it. So we have a 3 drive pattern higher. I wonder if that is the same case across all of the indices. That's the only counter time from narrative idea. I'm going to bring up 15-minute regular trading hours to the left. So to the left of the screen, 15-minute regular trading hours shows a stab into an old constant encroachment of open range gap. We have New York PM lows resting here just around constant encroachment of the New York opening gap. That's a very attractive target to the downside as well. Very nice target to the downside. I'll just put it on the chart, and I think that's all about a 15-minute chart. As an array, I see an array for resistance on this time frame is this breaker block here, and you clearly see that it has been used quite well. So this is a down close candle, last down close candle for this up move, and then we have a break below it. But she has another block here, one support, broke down, and then you find it rejecting the lower portion of the array. I'll just put that in red. It's a breaker here, but I'll put it in red. Even though I'm really thinking about the yellow, but I'll put it in red. So that's the 15-minute bearish breaker. That's the main array on this time frame. Bearish. So I'm still gauging order flow. I'm looking at this week. Constant encroachment of that week will be another bullish array. I'm gauging ideas to see if we find any resistance as we trade to those levels. I'm also looking at the bodies of this candle from high to low. So I'm looking at the lower portion. If we trade out of the lower portion of this inverted fair value gap and we're trading up to this array, I want to see how constant encroachment is used of this week. So I'm eyeballing it around 24,806 to 5. Let's just say 24,800. So do we find resistance at 24,800 or do we rip through it? That'll be insightful. So I've waited for 2 minutes. That candle has closed. We could not engulf this 15-minute down close candle. Instead, we have brilliantly tagged the low of that 4-hour inverted fair value gap. So with those ideas, I'm going down to the 1 hour time frame, or at the 1 minute time frame. I've dropped down to the 1 minute time frame. On the 1 minute time frame, I'm looking to see bearish order flow. I've seen the silver bullet rally. Silver bullet has rallied, and I don't know if that's enough, but it just seemed it bucked the low of that 4-hour array up in premium of the range. This looks like a breakaway gap. It seems to be forming a fair value gap right here. And yet again, this is another breakout block. So that's a breaker, that's a fair value gap. We've clearly disrespected that BC. So I'm actually looking at it as an inverted fair value gap right now. And I'll be looking to draw an implied daily range on that. First of all, I want to see what it looks like as an OTE here. If we'd actually trade to equilibrium of this range from high to low. When we're trading to the 4-hour array, I want to see if we traded to equilibrium of the range. So I'm plotting OTE, and actually we do trade to equilibrium. Now I've inverted the array, it's really confirmed bearish. I'm looking at the implied daily range now from that high to this low. That's to the target. My target is the New York PM highs, of course. So implied daily range looks like this. Bam. I need to buy at the breaker. I need to buy the breaker, bro. I need to buy the breaker. So I'm shifting that to the left. I'll require price to trade up to this breaker for me to go short. Come on, NQ. Could you give me the breaker? Honestly, it looks like I'll see this one now because the likelihood of that retracement is not too good. Not too good. Not good. Retracement not good. And that's the only level I could short for. Anything else would be chasing price. So I'm really looking to see if price could trade back. I want to give a 30. Oh god. If it comes up here, there's a likelihood that it trades to mid-leveling price. If it does, and the breaker fails, then I'm wrong. But it could trade to mid-leveling price, and that will mean the conditions are not as clean. And right like that, I'm in. I'm in there. I have a buy stop right there protecting the trade. I have a buy limit right there. And hey, I'm being very mindful. I'll be very mindful. I'm being very mindful to cut my losses short, to hold my winners, and of my models. Yeah, of my models. So because right here this is a continuation setup, so it's valid, it's a model. But if it's not a model, I ain't taking the trade. And I was very mindful to do my prep before the trading session. Without that prep, no trades. So gotta lock in, gotta stick to the rules. And you see this array, it looks very wonky, but this is actually a 5 minute. This is a 5 minute inverted value gap. That's why it looks like it's anchored to nowhere. It's a 5 minute inversion fair value gap. It was 5 minute BC that turned into a inversion fair value gap. So entries at 50% of the daily range, just around there. I see displacement in my favor. If I go close below that low, I'll add to the position and take some more off. So I actually want to, I'll take some risks off and I'll add to the position. That's what I'm saying. So I'll add one right there. I really don't want to over pyramid into the position when was so low, was so low. So I actually want to see an array form. I'm going to be patient to see if we form a CB here and see if I can use that CB. Also, I'm not looking to trade so low or pyramid so low. At this point, I could gladly just take my risks off. I can't get it. Okay, yeah, I can. So my risks is my stop loss is above the 5 minute inverted fair value gap. It's basically a free look at this point. I'm going to shift my take profits down to Monday's consequent encroachment because I'm about to adjust them. I'll take a partial at my terminus. I'll take 2 contracts off and then I'll hold one contract to this level. Dollar is rallying, man. Like dollar is rallying, so that's very good for bearishness in stocks. Dollar just took as Asia highs, rallying for some buy side liquidity from the open of the week, Monday's open. So that's very good for stocks. So actually, these are the areas I'm tracking. I'm tracking this order block, and I'm also tracking this. It's almost on the next candle. That's a CB. That's what I'm looking at as a measuring gap actually. I could short it, but that's too deep in the discount section of things. So I'm not looking at that. I'm looking at my objectives, my terminus, and to see price head for my terminus and my objectives. Looking at this candle to see if you can stay in the lower portion of that measuring gap, so to speak. Okay, so my first objective has been met. I just got 2 contracts off at that level. I'm editing this stop. So I like that candle, the way it closed. It wicked up, but it returned and closed with the other bodies way down under the other block, under the 4-hour BC high. Now, this is the hard part. I'm believing in my winner. So I have a winning trade. I'm believing in that winning trade. I'm letting nothing cloud my judgment, and I'm sticking to the winning trade. All these spikes up I expected, all these uh up runs, it looks like a very big candle, then it's closing bearish. That's expected. All of those are just retracements, and they're expected. I'm holding on to my winning position, and I'm waiting to see it come to fruition. So this is 7:43. I'm going to set a time stop on this trade, mainly because that's going into the macro. Because at the macro, I'm going to expect a great deal of, that's it's very depending how this 15-minute candle closes. In the macro, you can expect a retracement because it is the 10:50 to 11:10 macro that's coming up. So a retracement is probable. Let's put it like that. So especially if this 15-minute candle, the current 15-minute candle closes bearish, or rather closes bullish, pardon me. In that case, I'll be really trying to get out of this position early. That's a buy stop, protecting my position if that level gets traded to. Okay, right there, I'm out of the trade. So that was it for this one. That was a brilliant trade, man. I love the entry. I love the partial. That was very accurate, and it stops me out. I do not regret this target objective. That was more consequent encroachment. I looked around the higher time frame, and that was a draw for me. So that's been it for this one. If you found it insightful, if you found the execution nice, just drop a like. But most importantly, subscribe to the channel. That motivates me to post this stuff.